Hello everyone, welcome to this week's weekly market view for Monday the 10th of June 2024 to the Friday the 14th of June 2024. My name is Vishal, let's get started. All right, so it's Monday the 10th of June, let's start with the Nifty analysis. And as you can see the daily chart in front of me right now, and we have made an all-time high. Eventually, this was going to happen. But what is going to be now interesting to see whether this all-time high is going to sustain, because every time the market has previously made an all-time high, it has uh, given a very, very strong correction. So based on past history, can that happen again? Surely yes. And how the price could actually react after making an all-time high is also important to understand. So what we are going to do here is we are just going to be looking at a little history of our charts to see whether there is a possibility of a corrective move coming in on the Nifty before the markets continue its move to the upside. Just a little bit of a review from last week. Because of the elections and the results, we had this very strong candle coming into this area of demand. And this area of demand held extremely well, and price gave a very, very strong bounce from here. And this area of demand is now responsible to make a new high. So definitely this is a very, very key area for the market. In case if this area breaks for whatever reasons in the days to come, then the next area to watch out for on the Nifty as a level of demand is going to be this key area at the bottom. So here also the prices have spent very little time and have gone on and made the new high. So these are going to be more or less the critical areas to watch out for, because there is no overhead supply right now on the Nifty. Shorting preferably should be avoided, and focus should only be on long trades. Now let us say if the long trade is to be planned here, what could we expect here? So here we can just see that this was the all-time high, and markets breached this all-time high by a very, very small margin, and then gave a very, very strong corrective move to the upside. Then we had another impulsive move. Markets made a new high, and again they retraced back. Now, this was the high. Today we made another all-time high. So what can we expect? Okay. So now you can see on my screen, I have these open interest lines automatically plotted thanks to our indicator. And what is seen on the chart over here is that this 23,000 strike price is likely to act as a strong support for the market. So even now, if a corrective move takes place, what I expect the market to do is that it might give this corrective move towards this area where hopefully market will tend to find a little bit of a support. And why do I also say that is because if I look to the left, this area has been an area of resistance. So now the technical analysis traders or the market participants will look at this area of broken resistance becoming support. And plus we have this 23,000 strike price as well. So now what I expect is that once the price comes here, there might be a little bit of consolidation, and then there is a possibility of markets continuing its moving to the upside. In case if this 23,000 level breaks, then we might get a little bit of a more deeper correction in the market. But as long as this 23,000 level holds, we might continue consolidating or even start making new highs as we go along. All right, now let's look at the similar picture, but now we are going to be looking at the bank index, the Nifty Bank. So if you look at the Nifty Bank, comparatively, it's a little lagging as compared to the Nifty, because you can see that the Nifty and the Sensex are all making all-time highs, right? But the banking sector is not yet making an all-time high, although it gave a very, very strong bounce from this tested area of demand. Also happened last week. And now we see that the markets are struggling a little bit around this area over here at this 50,000 handle. So these lines are open interest lines. And what these lines do is they dynamically adjust to where the market participants are building positions, whether they are, building call positions, whether they are building put positions. And now I can see that if I look at this chart very, very carefully, and in case if Bank Nifty also does the same thing as Nifty, where it might try to push above, print a new high, there is a sign of a corrective move to the downside. So where can the corrective move actually happen? The corrective move can happen towards this area. Again, there can be a little bit of a consolidation, and then the markets can again take off. But if I differentiate Nifty from the Bank Nifty, the only advantage that Nifty has is Nifty is printing all-time highs, but Bank Nifty is not printing all-time highs. So first and foremost, it has this 51,000 strike price as its major barrier, which it needs to break and cross and preferably even close above it to give us a little bit of a more hope that the price wants to continue to the upside. Else, I would see the Bank Nifty range bound between 51,000 to 49,000 odd levels in the days to come. This is what the price charts and this is what the open interest data is suggesting us for at least this week. Let's move on to the next index. We are going to be looking at Nifty Financial Services, and we are going to be gauging those levels again based on the open interest and demand and supply data. So very similar chart to the Bank Nifty, the Nifty Financial Services. As you can see that prices are bouncing from this tested area of demand from last week. Price came very, very close and gave a very, very strong bounce. Now, we do have this level of supply, which is very, very similar to the level of supply on the Bank Nifty. But I would consider this supply zone as a little lower probability because this supply zone was caused because of the news on the election results. So generally, when you have these news-based candles, those zones tend to work less frequently than the ones that are not surrounded by news. Okay, because these candles imply that majority of the orders have already been filled. But anyways, let's have a look at how this price plays out. So again, very similar to the Bank Nifty. The Fin Nifty range, however, is much larger. So you can see that the highest call open interest is at 23,000 and the put open interest is at 21,000. So market participants are expecting a slightly wider range to play out on the Fin Nifty as compared to the Bank Nifty. So Bank Nifty range is a little tighter, but the Fin Nifty range is a little wider. So 23,000 to 21,000, and unless and until either level breaks to the upside, the market is probably going to remain in a very, very big consolidation. That is, it could probably just consolidate between this zone and this zone. Yeah, at least that is what the open interest data is suggesting us. Of course, this data can change today. It can even change, tomorrow as we go along. But for the timing right now, this is what we see on the chart. All right, the next index that we are going to be looking at is the mid cap Nifty. And the mid cap Nifty is a little dodgy all the time. Whenever you see these big spikes, and that's how this index is. But now if you just look at the mid cap very, very carefully, right? The mid cap also has printed an all-time high. And the moment it prints an all-time high, it more or less gives a little bit of a corrective move. Now, of course, we can ignore this because this is more got to do with the elections. But if you look at past history, right, whenever the market has made an all-time high, it is giving a little bit of a correction, then the big impulse move. So now what can I expect from the mid-cap Nifty based on the open interest data and the concept of demand and supply? I would expect mid-cap Nifty to take support at this 11,600 odd level. And if the market does indeed take support at this 11,600 level, then we might continue to see the move towards 12,000 eventually. Is this going to happen tomorrow or day after tomorrow? Maybe not. But most likely, in case if the Nifty continues to move up, the Bank Nifty continues to move up, then the mid-cap Nifty, has to move up as well. So 11,600, we are at the lower range of price. So we are expecting support coming in on the mid-cap Nifty at this level. And the highest resistance is around 12,000 odd levels. So we are expecting mid-cap Nifty for this week to range between 11,600 from the lower side towards 12,000 towards the upper side. Any break or close below 11,600 will again induce more, profit booking on the mid-cap Nifty. All right, the next index that we are going to be looking at is from the BSE basket, which is the Sensex. And pretty much the Sensex has made an all-time high, sees makes everybody happy when you see the markets are making all-time highs, especially the long-term investors. But let us look at it with a trader's perspective, right? So again, if you look very, very closely, 76,500 is currently taking support. And usually what happens is whenever the market breaks a level of resistance, let's say this was a level of resistance, then when it breaks, it comes down back to test it as support. And when it tests it as the level as support, then it is likely to give a bounce back. So that is what we are seeing right now. Now, whether this bounce is going to be sustainable and it is going to hold, that only time will tell. But more or less based on the options data, the range on Sensex is very, very tight. So it's just a 200-point range, as you can see, where the highest open interest on the put side is 76,500, and we are already, bouncing from that level. But unless and until we break 77,000 very convincingly, we would not expect prices to hit 77,500 or even 78,000. So what is our expectation for this week? Our expectation for this week is that Sensex will remain range bound between 77,000 to 76,500 unless and until either level breaks to the upside or to the downside. Let's move on to the Bankex now. And this is the Bankex chart as we see. And here you can clearly see that all these charts are looking very, very familiar. So if you look at the Fin Nifty and if you look at the Bank Nifty, so the Bankex chart is also pretty much very, very similar. And as you can see, prices held on to this level of demand, gave a strong move. Now, we do have this area of resistance, but like I said, that because this was caused because of news, so we got to be a little careful with this supply zone. We might get a little bit of consolidation over here. But in case if the markets do decide that they want to give a move to the upside, then I would like to see something like this happen. So let's say this is an area of resistance or supply zone, whatever you might call it. Now we have a break of this resistance. And then let's say if price comes down over here, and even let's say if it reacts to this area of supply, we would expect the price to come down, take support at this put open interest, and then continue its move up, right? This will indicate that the trend of the indices is healthy, and we would expect, a significant move coming in the market. Other than that, if you ask me, right now, the range is very, very clear. 59,000 is the highest open interest on Bankex, and 55,000 is the highest put open interest on Bankex. So we are expecting Bankex to remain range bound for this week between these two levels. All right, unless and until again, either level breaks to the upside or breaks to the downside. All right, now we are going to slightly shift from looking at the indices, and there were a few requests from the participants that why not we start looking at some of the important or the key sectors on the market, which will also help us to, probably look at some stock specific levels as such. So right now in front of me, we have the Nifty IT index. And as you can clearly see over here, if we just look at the weekly chart for a moment, prices are bouncing from this weekly level of demand. Okay, now we have reached a key area, which is this area, which is the weekly area of supply. And if we now go on to the daily chart, we also see that there is an area of supply where the prices are probably holding up. Okay. Now, in case if we are looking at a weekly supply versus a daily demand, ideally this supply zone should eventually violate and move to the outside, move to the upside. But right now, what we are seeing is that the price is holding into this daily supply zone, which also means that any stock from the IT sector which is coming into a supply will also face this resistance eventually. Okay. So just vis-a-vis comparison, if we just now open, let's say the Infosys chart, and if we compare what we are seeing on the Nifty IT sector, right, we see that exactly the Nifty IT reaction is also taking an impact on Infosys. Does this mean that from this area, Infosys is more likely to come to the downside? Probably yes, but this could be maybe a corrective move, because as you can see here, 1460 level is also a pretty strong support. and this was an area of resistance. So what might happen, or what we might see, is in case if there is some profit booking coming in the IT sector now, because the price has just rallied 3 days in continuity, we might see something like this happening, right? Prices might come here, consolidate here, and then eventually prices will start moving to the upside. Now, there is one key area of supply which I'm keenly watching, which is this supply zone on Infosys. And if this supply zone breaks, then we might see a very, very strong move coming in on Infosys. That's not going to happen right away. It will probably take a few days or maybe even a few weeks to come. And right now, what we are seeing is because of this 1540 level lining up with the supply zone and the IT sector also being in supply, we are seeing this potential corrective move coming in on Infosys. But what would be ideal on Infosys is that price comes down over here, consolidates, and then takes off, and eventually consolidates here, and then eventually removes this again. So pretty much right now, things are looking, okay with respect to the IT sector. There could be a little bit of a retracement coming in, and then we might see a little bit of a takeoff in the market. All right. So pretty much this is it from me. And thank you very much for being patient and watching this. I hope you liked this weekly analysis. We try to do things a little bit differently than everybody else, but I'm hoping that this weekly analysis is proving useful to you in at least gauging potentially what the direction of the market is or where the market direction is, and assessing the market in the right way using the concept of demand and supply. Have a lovely week, everyone. See you all next week. Thank you. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.